Distinguished guests, welcome to those who have not heard me yet. We're going to get started in 1 or 2 minutes. We're waiting until all the participants get connected to the meeting. Today's webinar is going to be recorded and it will be available on our social networks so that the guests and the other audience would be able to familiarize themselves with the content of the webinar later. If you are not able to join online, I will present myself today and I will present today's guests, and then we will get started.
Да, уважаемые гости, уважаемые спикеры, еще раз добрый день. Я думаю, что пора
Dear
уже.
guests, dear speakers, it's time that we get started. Those who have not been able to get connected yet will have the possibility to listen to the webinar recording. My name is Danielchuk. I am the head of the Belarusian Business Center project, and as part of this project, in support with the Polish Union of Employers and Employees, we're supporting the Belarusian private business to relocate from Belarus to Poland. We are providing organizational legal consultancy support. We are providing consultancy on the Polish market, as well as organize various business activities and events for the Belarusian entrepreneurs who are working in Poland. Today's webinar is very important as it's devoted to the Polish economy and its development in 2022, as well as the outlook for 2023. Each businessman or entrepreneur will be using or are using their economic parameters and figures to be able to plan their further activity. So today we're going to speak with the president of the Warsaw Entrepreneurship Institution, Mr. Tomasz Wroblewski, as well as the senior economist of Polish Bank PKO, Piotr Palutkiewicz, as well as we shall talk to Mr. Piotr Palutkiewicz, who is the head of the Polish Entrepreneurship Center. Belarusian Business Center is organizing a lot of events for the Belarusian entrepreneurs in Warsaw, as well as all over the Poland, and you'll be able to follow our activities on social networks. PKO Polish Bank does not to be introduced, I believe, because this is one of the key banks in the Polish economic system in terms of its assets, and Warsaw Entrepreneurship Center is one of the biggest think tanks that provides analysis of economic, political, social, and societal issues. So today I shall give the floor to Mr. Tomasz Wroblewski to open our webinar and to provide the first part of the economic outlook of Poland. Welcome.
Welcome. Thank you so much for invitation. I'm honored to appear and to talk a little about the general outlook of economic and probably a little political situation of Europe, our environment for all of us. We are, as it has been mentioned, Warsaw Enterprise Institute, and we are mainly dealing with environment for business, which is much wider than only economics, but it's also social environment, politics, education, demography. And so this is a little the scope of my discussion. But I'll start with very general sentence and notion that we believe that the world is in the midst of its major transformation. It's not just a war. There are a lot of events chasing each other for the last a couple of years. We believe that liberal institutional framework that created Western Europe is now in a deep crisis. It is not something that happened on the 24th of February. It is obviously a long process, but it was definitely escalated by a war. By energy crisis, military deficiencies, financial burdens also of helping Ukraine, the fallout of German model of growth, debt crisis in Southern Europe, but also in France, new challenges with growing bond spread in Europe, disillusion with energy transformation. The list is long and much longer, but it's just to stress how complicated our forces we are facing in Europe today. And if we add institutional crisis, I mean EU, but also global institutions like World Trade Organization, like most UN agencies, all of them are going through the some sort of internal crisis and for their own new purpose, and all of them having a problem to deal with the challenges we are facing. So we expect more wrangling also within EU, conflicts between countries within EU. Some of them are maybe not obvious, but they are there. I mean, conflict between Germany and France on energy subsidies, for example, North against South, or particularly Germany, especially when it comes to Euro reform and financial reforms. Well, saying all this, we have to admit that contrary to the worst prognosis last summer we had, the feared economic collapse has not occurred. Germany industrial production rose actually. Unemployment remained around 3%. Early estimates of GDP growth of the entire EU in the third quarter compared with the previous quarter, it's plus 0.2. Obviously, it's not much, but it is not a recession. Employment continued to grow for last months. Retail sales before Christmas also rose, indicating unwanted consumers. Unseasonably warm, I would say, weathers reduced our worries about energy crisis. We obviously have our feet now in the snow, but it is not catastrophe yet, and we are not expecting some very difficult weather in the coming months. Is this mean that the crisis in Europe is over before it begins? No, I think we do have a problem. Some of the positive development I mentioned, and I'll talk about, could also mean the emergence of new risks we have to deal, something we didn't predict. Although the whole price of gas has fallen, as we mentioned, to around 125 or 130 euros megawatt, it is a big change from 430 euro. But we have to remember that last year, at that time, the gas was around 20 euro. So it's a big difference. Also remember that problems that contributed to the surge in energy prices over the summer, including a shutdown, for example, of several French nuclear power plants, also highly speculative oil market, all those that still persist despite some seasonal improvements I mentioned. Also, we have to remember that Russia is still selling some gas to Southern and Eastern European countries. Some gas is trickling to the West. Some of it is being reshuffled, like, for example, through Azerbaijan. All this may obviously end soon if Putin decides to, as he mentioned, starve Europe. This would apply to oil and gas, and it's definitely could worsen the situation. Another problem relates to extensive Western bailout programs, very generous subsidies and bailout programs for companies we saw since 2021. In all different subsidies, Western governments pay out 735 billion euro. Just to give you the scale idea, all the money, the cash EU designated to help Ukraine was 19.7 billion. If we add individual help, institution, private citizen, government, Poland included, we are talking about like 52 billion. So you can see the scale, 735 billion and 52. It also tells you what West really is afraid of, and or how much attention they pay to their own citizens, and comparing to war in Ukraine. European governments are determined to protect consumers from effects of a gas shortage, and it is paramount. This is something they will really struggle for. They fear economic and political consequences, turmoils. They still have back in their head what happened in France, those yellow jackets revolution. So they don't want to repeat it, and this is very serious for every country. So France, for example, has capped gas prices twice last year, and electricity prices are at 4% only higher than last year. And it intends to increase these caps by 15% in 2023. And Spain has subsidized its electricity from gas. Also, it's a large, I don't remember numbers, but it's a large sums. Italy, which generates 40% of electricity from gas, has cut taxes on both electricity and gas consumption. Poland, as you know, just rolled cut prices earlier. Subsidies also, we saw subsidies to coal, plus additional social subsidies, and more to come as the election season comes soon. The EU plans to get rid of Russian gas for all. This is declaration by almost all the countries. Just to mitigate a major crisis, they have three main threats how to approach that. The first is to secure as much gas as possible from other suppliers and filling up the storage all the way up to the roof, hoping this would avoid need for rationing in this winter. Long-planned pipelines from Norway to Poland are already ready, and also pipeline from Poland to Slovakia have opened that allows redistribution of gas. There's also interconnection to Moldova and Ukraine. However, we have to remember that for 2024, there's any single additional gas supplies in plan. There's like no new openings. There's no new places where we can actually supply our European countries with new gas. So next year, Europe will have to compete with buyers from Asia, much heavier than now. The competition could be fiercer if China obviously finally overcomes COVID. And this would be, we expect within 18 months, this will be the prices could go up again. We don't believe there's a real danger of endangering population, neither this winter or winter 2024, but economic situation itself could be daring. So the answer to my question whether we have we overcome the crisis is unfortunately no. Energy and financial crisis for Europe is far, we believe, from over, and the rifts in Europe over how to deal with deepening problems will be also accelerating this atmosphere. Inflation is also accelerating. Huge spending on energy subsidies is causing growing in debts, and possible fiscal problems draw from this. Also, feverish struggle to keep the lights on has distracted a lot of governments from other pressing issues and reforms they were supposed to deal with. The other issues we have to deal with, it's like United States, and a big reduction, Inflation Reduction Act, which is over $400 billion, and it is money deducted for energy, manufacturing, transportation subsidies. They call it Make It in America, which means please come to America and produce your goods in the US, especially electric cars. And so we already, just weeks after the announcement, we see first companies in Sweden, in Spain, in Germany, who are already announcing investments in the US. We are very happy to see, we're glad to see Mercedes bringing to Poland their battery factory, but we see more actually companies moving away from Europe than within. We have large German company like BAS, or German, this is a big German chemical giant, also Siemens, this technological leader in Germany. Recently, they announced plans to permanently reduce its operation in Europe. And if gas supplies from Russia are cut, we believe that not only those companies will be moving. Some of them are moving to China, some to Germany. The additional cuts of supplies could cause the 300 most gas-intensive products in Germany will be produced in 2024, 2025. It is a major change. And I don't have to say that the loss of investment for its economic, whatever reasons, economic, energy, foreign drainage, and overregulation. Overregulation is probably a topic for another webinar, but all of them makes Europe poorer and contributed to a sense of declining economy strength. Something that will pertain and something that I think will add to political might. In general, Europe is doing worse than any other major economic bloc right now, which might mean China or the America. Of the 100 most valuable companies in the world, only 14 are European. And you must know that the biggest EU company, it's on a 12th place only, and it's Louis Vuitton. It's not some technological giant. A crisis and war progress, and politicians will be more tempted to throw out the rule book and respond with the subsidies in escalating arms race, but not military, but also corporate welfare, which is helping companies. As the other two pillars of the global economy become more interventionist and protectionist, Europe, with its strange insistence on adhering to the World Trade Organization rules on free trade, will be looking more and more like a loser. We are just more and more out of the game. Germany economy minister even accuses America of picking investments, the same as to China. It's probably true, but Europe has no proper answer, no action against it. War obviously creates a lot of financial vulnerabilities. Energy inflation is spilling over into the rest of European economy. We have the sharp dilemma for European Central Bank, how they supposed to behave. It must raise interest rates to control the prices, but if it goes too far, it could destabilize weaker Eurozone countries, including, for example, Italy, which is a very difficult situation. The focus on energy is consuming, as I mentioned, all the time and attention of European politicians. So they are neglecting all other policies with so much concern about surviving the next winter. They pay little attention to the important economic measures that will bear fruits for a long term. In France, for example, President Macron shelved a controversial pension review, first during a pandemic and now because of the war. Other countries are trying to wrangle out of the reforms. They have like committed money to, for example, the defense, like Germany. Initially, they were supposed to spend 2% of the GDP. Now we hear that they won't be able to do it till 2025. Italy forestalled finance reform, and they say they won't be able to do it till end of 2024. Great Britain economy is also shrinking and losing some major portfolios on financial market. So we are seeing like whole Europe is on hold, and the reforms we really needed and waiting for are not there. The war in Ukraine has exposed a lot of flaws also in other areas, like, for example, green energy, forcing countries like Germany into real-time energy experiment. As you know, they're going back to coal. Germany is talking more now about perma-crisis, they call it, permanent crisis. They have to go through and they have to deal with current affairs not building their position. Olaf Scholz just published an article in Foreign Affairs that he pretty much paints a picture how Germany could be a leader, should be a leader for European reform and a new start. But frankly, a lot of things he talks about and he promised, they're already neglected. They are not done. Economist Weekly analyzed 20 industries in Europe, looking how the large multinationals are presented there, European, and all the companies have lost its shares. European companies, 14 major European companies lost its share in the world economy. So European brands are losing their prestige. And the second reason for the multinational troubles is China. We have to deal with the typical Chinese strategy companies that are destroying first low-cost products, then gradually move to more sophisticated, offering even prime products. It happened in some industries. Now we see it's slowly happening in car industry. So no surprisingly, European companies are worried about the coming months. And according to survey that was done by European Union, the latest forecast is mild recession in the winter and stagnation for the rest of 2023. Goldman Sachs, Bank of Goldman Sachs, did also some research, and they believe the economic output in Europe will be permanently reduced by 2-3% for at least next coming 2 years. We at the Warsaw Enterprise Institute published today our annual report, Opening Balance. Every year we try to open new year just to show how Poland and Polish economy is pursuing the Europe richest countries, which is Germany. And we have very interesting results. We were surprised to see that Poland actually picking up and shortening distance to Germany. But when we look closer, it's not because Poland is growing so fast. It's Germany is slowing pretty much, slowing down. This is also a case for most European countries. And if we look at the position of Poland in regard to rest of the world, we will see that the distance is growing. It's not shortening like the US, Singapore, Hong Kong. Hong Kong is not there, but Taiwan. So it means that whole Europe is kind of sliding back, and the world is start moving up. So this is my general overview. I hope the part about Poland itself will be more optimistic. Thank you.
Господин Вроблевский, спасибо большое вам. Если позволите, один вопрос.
Thank you, Mr. Wroblewski. I will ask one question now, and the rest we will ask during Q&A. You've been talking a lot about geopolitical factors and how they become more and more important in terms of economic growth of Poland. And as our today's audience are the farm owners and Belarusian businessmen. So how do you think how these geopolitical factors of what is happening in Belarus and Belarusian economy, how will it affect the region? I understand that a lot depends on the conflict between Russia and Ukraine and how it will end. But for example, if it remains the same like now, what will happen to Belarusian economy and especially Belarusian economy in relation to Poland and other European countries? What's your forecast?
Well, any crisis in Europe will definitely affect Belarus, even though I believe the country is more dependent now on situation in Russia and it's more political than economy, since export from Belarus has been cut down and there's probably all the ties and the human ties and the economic ties are cut down. So I'm not quite sure, but I think you can't look at the Belarus in context of global economy since it's severely cut off. I believe that on irony, I think that if the crisis in Europe will go further, probably some sanctions or some loopholes in the sanction could be found, that European countries won't be as persistent on sanctions as they are now. We saw all this discussion in the European Union about sanctions on some individuals trading food from Russia. So this, and there's a lot of attempts to kind of widen this gap and to liberate some sanctions. So actually, if the worst situation will get in Europe, and for example, food prices are go up, or fertilizers will be a major problem. I could imagine some Belarusian products could actually slip into Europe and European Union through some loopholes, but I don't think this is a long run for helping Belarusian economy. I think this is more dependent on political factor.
Ну, конечно, такие временные позитивные.
Well, there can be some temporary positive factors, but of course they are very temporary. They will not affect the structure, the global situation in Belarus. Without good structural reforms, Belarus will also be stagnating, because currently the Belarusian economy is 10 times less than that of Poland, and this gap can even increase in the next years. Thank you, Mr. Tomasz Wroblewski, the president of the Belarusian Entrepreneurship Institute. Now I give the floor to Mr. Petr Buyak, who is the senior economist of PKO Bank of Poland, and there he is doing analysis and macroeconomic reviews. So Petr can tell us some practical things, like some maybe figures and some facts. What were the results of 2022 and what shall we accept in 2023? What is the inflation in specific numbers? What will be the economic growth in different sectors? So Petr, thank you very much for joining us today. We're really glad that you did. So the floor is yours.
Thank you. I'm Piotr Bujak. I'm chief economist and head of economic research at PKO Bank Polski. This is the biggest bank in Poland, by far the biggest, and one of 50 largest bank in Europe. We have very strong capital base. During the recent EBA stress tests, European Banking Authority stress tests, PKO Bank Polski has been among top 3, top 5 performers. I will start with a brief overview of global background. Tomasz has talked quite much about external environment and in details. In cases of some economies, I will be more general, but I think it's useful to give you our view on external environment, major economies, monetary policy of major central banks, to understand our view on the Polish economy. I hope you can see my slides.
Да, мы можем.
Okay, so we are starting with the global
Yes,
outlook.
we can.
And here there are not many reasons for optimism. There is rather prevailing view that the next year for the global economy, including European economy in particular, will be quite challenging. It will be a difficult year, especially the first half of the year is expected to bring an economic downturn. And as you can see on these charts, a recession is a baseline scenario for major economies like the US, Germany, the whole Eurozone, and unfortunately also for Poland. At least a technical recession, that is 2 consecutive quarters of quarterly decline in GDP. This is baseline scenario for major economies and for Poland. On the right-hand side chart, you can see that especially the Eurozone and its core, that is Germany, are in trouble. And Tomasz talked about it a bit, and I agree with some of his thoughts. And especially as regards Germany, I think they are at the crossroads and they have a big challenge. They have lost cheap energy commodities from Russia. They will not have access to this anymore, definitely not on such a scale as in the past. And I think one cannot forget about the fact that China is also in a clash with the West, especially with the US, and is gradually being isolated from global or excluded from global supply chains, which is also a problem, a challenge for the German economy on the demand side, because one can say, of course, the reality is much more complex, but we can simplify things and say that Germany was pumping in cheap energy resources from Russia and selling durable goods or investment goods to China. And this economic model is at threat at the moment. So there is a big challenge for the German and the Eurozone economy going forward. But in the next few quarters, we will simply have negative impact of the energy shock related to war in Ukraine. And also this will be a negative lagged effect of quite aggressive monetary policy tightening taking place over the past few quarters in response to inflation increase in major economies. Also in our region, in Poland, the Polish central banks also reacted to elevated inflation with rate hikes, and this will be hurting economy over the next few quarters in particular. Inflation hopefully will start declining soon, and for some major economies like China and the US, it seems it is increasingly clear, I would say, that we have already passed the peak, and 2023 may be marked by disinflation, by declining rates of inflation. For Europe, situation is less favorable, more tricky. Here we are much more in the epicenter of the energy shock. We feel much more the blow of pro-inflationary impact of the war in Ukraine. So here inflation may be higher for longer, more sticky. The decline in inflation may take much more time, and fighting inflation may be more costly. So the inflation outlook for Europe is less favorable or more worrisome than for other major economies. And this is what you can see in current trends depicted on these charts. Stagnation or even recession expected for especially the first half of the next year, plus disinflation, maybe slow, but disinflation. This gives hope for a turn, a pivot in monetary policy of major central banks. And this would be positive for medium-term outlook of the global economy, including our region, Poland. It is especially important for economies that have large external debt or large foreign currency denominated debt, especially in US dollars, because at the moment when Fed is quite aggressively tightening its monetary policy, raising interest rates and conducting quantitative tightening of monetary policy, reducing its balance sheet, selling assets to the market, reducing liquidity in the markets. This is painful especially to borrowers, especially to borrowers in US dollar. And if we eventually, if we get disinflation eventually, there is a chance that the Fed, the US Central Bank, will stop hiking rates soon, maybe within the next few months. Our assumption is that the Fed will stop at 4.75%, delivering a rate hike of 50 basis points in December. This is wide market consensus at the moment. And we also expect one more fine-tuning move in February next year by 25 basis points. And that should be the end of monetary tightening in the US. And this would be a turning point for the global economy, and this should be one of the factors leading to gradual, slow probably, but gradual recovery of the global economy starting in late 2023, following recession in the first quarters of 2023. So, and the pivot of major central banks would be positive for financial markets, for investor sentiment, and the end of rate hikes in the US would remove depreciation pressure on emerging market currencies, also on such currencies like the Polish zloty. And now let's turn to the Polish economy. Here, so far so good, even despite the negative shock related to war in Ukraine. The Polish economy has performed quite nicely in the course of 2022. According to our estimates, full year growth will be around 5%, quite a strong result, following nearly 7% growth in 2021. We had very nice, very strong recovery after difficult pandemic 2020. So this year is surprisingly strong. The Polish economy has once again been resilient to adverse external shocks. The Polish economy has proved to be resilient to adverse external shocks. But we believe that at least a mild, moderate technical recession over the next 2 or 3 quarters is inevitable. It cannot be avoided. Simply the magnitude of the global slowdown and the energy shock that we feel directly in Poland is too big to avoid recession over the next 2 or 3 quarters. Also, a kind of technical factor reason for expected recession in Poland over the next 2 or 3 quarters is very strong inventory cycle in Poland. Polish corporates have built up substantial inventories over the past few quarters. They were buying like crazy, everything from wood to energy commodities to some other products. And now with weaker demand conditions, they will be depleting, reducing these inventories. This will be disinflationary, but also recessionary. This will be negative for the current economic activity. So this will be a kind of specific negative factor for economic activity over the next few quarters, just 2-3 quarters, and need to reduce excessive level of inventories. And here on the left-hand side chart, you can see our forecast for Poland's GDP over the next year, also for major elements of domestic demand, that is private consumption and investments. And as you can see, we forecast recession in Poland, also for annual growth rate of GDP. The first, but also quite likely the third quarter of the next year will see negative GDP growth in Poland. In sequential terms, I mean, if you look at quarter-on-quarter changes, there may be recession starting already this quarter, the final quarter of this year, and lasting until mid-2023. So generally, the first half of the next year will be the most difficult time, as there will be coincidence of the negative impact of the energy shock, also the negative inflation surprise for households, deep, nearly 10% drop in households' incomes in real terms, and also negative lagged effects of quite drastic interest rate hikes over the last year. And as you can see, the biggest burden will be on consumers. Private consumption will drop more than investments over the next few quarters, mostly due to elevated inflation and a few percent drop in real incomes of households in Poland. Fixed investments should perform better, relatively better. There are large investment needs in the Polish economy. There is still exceptionally strong inflow of FDIs to Poland, foreign investments to Poland. Poland has gained a substantial share in all foreign investments or greenfield investments in the EU over the past few years. Poland seems to be a kind of geopolitical winner of recent years. Brexit helped Poland because already since Brexit referendum in 2016, there's been a strengthening of FDI's inflow to Poland, both in manufacturing and services sector. And Poland gained share in all greenfield investments coming into the EU at the expense of the UK most. And Poland was the top performer in terms of attracting foreign investments within the CE region, also as compared to the size of the economy. So it was not Czech Republic, Hungary, or Slovakia, or Romania, or other economies in the region that attracted investment so much as Poland. So investments should be performing better. And generally, we believe that with strengths of the Polish economy, structural strengths of the Polish economy, it should get back on track of relatively strong growth already in late 2023. This will be the beginning of normalcy, of getting back to normalcy in subsequent years. And for 2024, 2025, we forecast 3 to 4% GDP growth in Poland. And it should be one of the best results in the EU. The same as in the previous years. Over the last nearly 20 years of Poland's presence in the EU, Poland was the strongest performing economy in the EU, the strongest growing economy in the EU in a very stable way. It was the only economy that avoided recession during the global financial crisis. And we believe that there are still some important structural advantages of the Polish economy, and there will be underpinning relatively strong growth in subsequent years. And strengths of the Polish economy include high competitiveness, even increased over the past few years, with a relative drop in unit labor costs. And I mean that wage growth in Poland relative to productivity gains was growing less than elsewhere in the region, everywhere else in the region, even than in Germany. And that's why Poland's competitiveness has even increased over the past few years. What is more, I think it is worth to remember that Poland is one of the least indebted economies in the EU. If you look at combined public and private sector debt, there are only 2-3 less indebted economies in the EU, much smaller than Poland, like Slovakia, and among major European economies, 10 biggest economies in the EU, Poland is by far the least indebted. And this, in our view, also a very important competitive advantage of Poland. And these two competitive advantages of Poland and also some other natural advantages like access to the European market, Poland is member of the EU, big size of the internal market, all these strengths, also improvement in infrastructure, substantial improvement in infrastructure, transportation infrastructure over the last decade or so, since Poland's accession to the EU. All these positive factors mean that now, when global reshoring, nearshoring, friendshoring is intensifying, also in response to geopolitical shifts like war in Ukraine, Russian aggression, China-US tensions, amid this geopolitical tensions, Poland is seen as very preferable, even favorite location for reshoring, nearshoring. And here in this table, you see results of a survey of Maersk, the biggest global shipping company. They've made a survey together with Reuters agency. They published a report 3 weeks ago presenting results of this survey. And as you can see in this table, for European companies, Poland is the most favorite location for reshoring. So, for instance, if a European company decides to move manufacturing or services from China somewhere else in the world, then Poland is the most frequently picked location for this reshoring, right? So we have a quite strong conviction that the Polish economy is gonna keep outperforming others for the next few years. Maybe not for the whole decade, maybe not for the next 20 years, but for the next few years, this economy should be outperforming others in Europe.
Господин Буяк, если позволите, краткий вопрос. И будем потихонечку подводить к концу выступления. Во-первых, спасибо большое, но на этом не заканчиваем.
Mr. Bujak, if you allow me a couple of questions. We are not finishing yet, but we would like to ask a couple of questions that are of biggest concern for our entrepreneurs. So this is the issue related to your forecast of inflation in Poland, in the European region. The second is the exchange rate of Polish zloty to euro. And one more, sorry that I have not warned you in advance about these questions. What's your evaluation of the perspectives in the following sectors, which is the IT, transport and logistics, transportation, and civil construction or just construction areas, because 3 areas are most let's say extensively represented among the Belarusian businesses. These are the key areas which the Belarusian business is represented by. Of course, there might be some kind of shocks or decline because of the different hits and because of the recession. I hope the IT sector does not fall under this recession influence. And the 4th sector is retail. So what would be your forecast regarding this inflation and how the sectors might be affected or not?
Sure. So I've skipped a few slides on the labor market. It will be covered later. And now inflation. Here in the near term, unfortunately, we expect further inflation increase. At the start of 2023, we will see higher energy tariffs coming in, and this will lead to inflation increase to over 20% in January and February, but then starting from March, inflation should be on decline, similarly as globally. And there is a number of reasons for that. First of all, and this is 1/4 of Poland's consumer basket, 1/4 of inflation are food prices. Here we see a downward trend globally over the last few months, last few quarters, and with some lag of around 9 months, 3 quarters. This, as you can see historically, translates into the domestic Polish food prices. So this is one reason for expected disinflation, a downward trend in global food prices over the past few months, past few quarters, following the shock after the outbreak of the war in Ukraine. The second factor, energy market. Here we can see some normalization, some improvement in the situation in the energy market, a drop in prices, still I would say even substantial correction of earlier spike in energy commodity prices, and this should also be disinflationary over the next year, following first the hike in energy tariffs at the start of 2023. And then please remember about a drastic tightening of monetary policy in Poland, negative for consumers, as I have mentioned earlier, transitory negative for consumers, but this should be disinflationary. Look here at results of these drastic rate hikes. What is happening with loans to households, right-hand side chart, and to overall money supply. Here we have money supply M1 aggregate, which is cash in circulation and demand deposit, so transactional money, illustration of consumption demand, partly investment demand in the economy, and as you can see, money supply is sharply declining at the moment in Poland, both in nominal and real terms, and this heralds recession over the next few quarters, and this also heralds disinflation in the course of 2023. So based on these few important arguments, but also taking into account some other factors like survey data, simply enterprises alone themselves, they start declaring that their pricing power is becoming weaker and they are not going to increase prices so often and so much as during 2022. So we believe in disinflation over the next year. The start of the year will be still difficult as regards inflation, an increase to over 20%, but then decline to around 10%, maybe slightly below 10% at the end of 2023. And our forecast is in line with market consensus. If you could take a look at Bloomberg survey, you will see the same numbers, similar numbers. Also, the Polish Central Bank has quite similar view. And with such growth outlook and inflation outlook, I mean recession in the next few quarters and then inflation decline throughout 2023, except for the first 2 months, we assume that the Polish Central Bank may start monetary easing interest rate cuts in late 2023 and continue them in subsequent years in 2024 and 2025. The first rate cuts in late 2023 are going to be cautious, not very big one. Only in subsequent years, the process of rate cuts may accelerate. And as regards situation of the mentioned sectors of the Polish economy, we believe that regardless of cyclical developments, regardless of whether we have recession or economic boom, IT sector will be performing strongly. And there is a substantial shortage of IT specialists in Poland. So we believe that even during an economic downturn, this sector will be outperforming other sectors of the economy. As regards transportation, civil construction, and retail, these are strongly, clearly cyclical sectors. So the next 2-3 quarters will be difficult for them. But medium-term prospects are very bright. Once the economy gets back to trajectory of solid growth of 3 to 4%, when Poland gets EU funds from the recovery fund and from the next multi-year financial framework, when we have a stronger infrastructure investments, then civil construction should be performing much better than at the moment. And also the start of rate cuts. You can see this on the left-hand side chart. This should be very positive for residential construction. Now, residential construction has very difficult moments due to impact of drastic rate hikes that freezed demand for dwellings, for houses, for flats, for mortgages. So also banks feel the pain here. But when rate cuts start, then we should see revival in the Polish housing market, and this will be very positive for residential construction. So a few difficult quarters for construction. I think that unfortunately the whole of 2023 will be difficult for construction, but then this sector should perform very nicely in the Polish economy. Transportation, here much depends on the whole European economy, and with recession in the Eurozone, also in Poland, this sector will also will have some challenges. But again, once the economy returns to stronger growth, prospects will improve. Retail, unfortunately, the next few quarters may be quite difficult due to weakening of consumption demand, and also one should remember about the cost pressure. In early 2023, actually for the better part of 2023, retailers may feel the pain of increase in energy costs, also labor costs. So for this sector, 2023 will be also quite difficult, but medium-term, long-term prospects seem to be very bright.
Да, Петр, спасибо вам большое. Если позволите, будем уже переключать.
Thank you very much. If you allow me, we'll start talking about labor market with Piotr Palutkiewicz. This was Petr Buyak, the senior economist of the PKO Bank Polski, who presented us macroeconomic indicators of Poland development in 22-23. Thank you again for your presentation, and I hope that our Belarusian businessmen will find this information useful, and based on that, they will plan their activity in the next quarters and years. Now I introduce to you Piotr Palutkiewicz, Vice President of the Warsaw Institute of Entrepreneurship, who will tell us about the labor market in Poland, about the trends in this market, and what we can expect in the future. So, Piotr, the floor is yours.
Thank you, Dmitry, and thank you for the invitation for that webinar. To complete the presentation about the economic indicators in the last year and for the upcoming years, I would like to add some information about the labor market. To make it briefly, the first graph you can see is the average gross wages and salaries in enterprise sector. We have to be a little bit caution when we look at this data, because it shows the average salaries in enterprises which employ more than 10 employees. So you can see that the average wages are growing to 6,500 zlotys this year, and in the next year we expect it's gonna hit even 7,000 1,000, according to Polish authority, the Polish government, in the forecast for the finance and for the state budget. So that there will be a growth around 10%, around average 10%, which I will cover later.
Петр, я прошу прощения, а можем попросить развернуть презентацию на весь экран, чтобы нам чуть лучше было видно? Спасибо большое.
Can we please put it like in full screen mode so that we see better your presentation?
At my screen, this is a full screen. So, isn't it?
Нет, на самом деле нет. Может,
no, it's not the full screen. You probably have to press the slideshow button, and there is a button full screen. Just press it, or slideshow. It's a slideshow button.
Is it correct now? Okay, sorry for that. Yeah, so we see the growth in the average salary, and we'll see that growth in the upcoming years. I will talk about that issue later. When it comes to minimum wage, this year that was a little bit more than 3,000 zlotys, but in the mid of the next year we expect 20% of increase of that minimum wage. This is fixed already, and this is in the 1st of July. There will be 3,600 zlotys, the minimum wage. There will be 2 rises of that salary in the coming years due to the high inflation, which is in the Polish regulations written. So we have to have that in mind to those wages which are minimal according to the Polish law. When it comes to unemployment, still we see a low level of unemployment in the country, and according to what Piotr Bujak said, we don't expect a huge increase in that figure. Probably the unemployment rate will stack at this level around more than 5% in the upcoming 2 years. But still, that not will be the figure that will increase some numbers that will be uncomfortable for the whole economy. By the way, we can say that we've got some interesting model of that employment market in Poland to stop increasing unemployment. This is easy just to stop giving visas in every embassy in the world, like the numbers of immigrants that are letting into the country is hitting the very high and one of the highest number in the European Union. And still that number was high even before the war in Ukraine. So this is one of the tools that can be used to stop the increasing the rising number of the rising figure of unemployment in Poland. So still there will be a little bit expected increase, but that will be around 5%, that which should not concern the economy in general. Those factors, which is still a low level of unemployment and the high inflation, will push people to ask for more money to their employers. As you can see, the increase in nominal wages in European Union countries in the upcoming years will be one of the highest in Poland, which is around 10%. But you have to remember this is the nominal increase. This is with no inflation included here, with the average, that one is in Polish, that graph is in Polish. The European Union average increase will be 5.2%. So this is Poland will experience double higher increase in nominal. I call that the nominal wages in European Union countries. But still, we have to remember that Poland have one of the highest inflation. So in the real wages, including and taking into account the inflation, the real growth of Polish salary is minus 1.9%. So this is not increase, this is decrease in the real wages. So what we can see on that micro level of companies, probably the employers, our employees will ask for increase of their salary around the market expectation is they will get that increase in wages around from 10 to 12%. You can see here the blue graph is a growth of salaries year to year. So in the first quarter of the upcoming years, it will be around 13%, and we'll keep that level in the next quarter. And we expect the lower level of that increases in the second half of the 2023. The orange graph is CPI, which is actual the inflation. So you can see here that the increase in salaries will be still lower than the inflation. So our employees will be asking for money, but highly probably the companies won't fulfill their asks. So there will be like, as I said, 12 to 10% of average increase in salaries. Still less than the inflation, as I said. So I'm coming back to that graph. The real wages will decrease around 2% in our country. So the general conclusion is that employees will be asking for more money, and the companies will partly fulfill their requests. When you look here, like the dynamics of average monthly real gross, you can see the pensions here, which are blue and oranges. The orange with the farmers' pensions and the disability pensions. And gray graph is average monthly real gross average monthly salary growth, comparing year to year. So you see that level of asking for, we are a little bit more to the end of that graph. The level of average monthly growth of salaries is decreasing, and it's minus 2% in the last quarter. So to sum up, we still experience the growing number of migrants in our market. The unemployment will be not the main issue and the main concern of our economy. And there will be an increase in average salaries around 10 to 12%, which will be lower than the real inflation. So it means the real remuneration of Polish workers will decline. So that's the first year in around this decade when the actual feel of being, the people will feel that they are less rich than they used to be 1 year before. So this is something new in our real economy that we will experience. So this is the overview for the labor market. And you still have to remember that we've got different sectors. The level of pressure on salaries might be higher in, for example, IT sector that you mentioned before, where there is still a lack of employees. on that market. But still, there will be a higher pressure on that lower level of the labor market, which is blue-collar workers, for example. So this is what I showed is the general view, but we all have to remember there is different sectors and different regions of labor market. So it looks completely different in big cities comparing to some rural areas, for example.
Да, Петр, спасибо огромное за презентацию. Теперь, я думаю, многие белорусские предприниматели будут знать, чего ожидать. Да, уважаемые участники, я прошу прощения, у нас были некоторые технические неполадки, восстановились.
We're really sorry that we had some technical issues. Piotr, are you with us? Piotr Palutkiewicz, are you here? Probably Piotr also has some technical problems. Okay, now we'll have a Q&A session. We'll make it short because we are running out of time. But if any of the participants has any questions, you can send them to our Q&A module, and I will ask our speakers, so send us your questions. You can do it in any language.
Just after the end of the presentation.
Да, на самом деле так получилось.
Yes, we at the same time we also lost the connection, so the whole session collapsed. But now we restore it, and now we'll have a Q&A session, and we expect questions from our participants from the chat to the Q&A module. It will be just 10 minutes, this Q&A session. So I will start with the question. I will ask the first question myself. It's about macroeconomic perspectives of the region as a whole, not only Poland, but other countries. So today, Petr Buyak and Mr. Wroblewski said that the growth rate of Poland is higher than in other countries, for example.
И, наверное, одним из важнейших факторов в этот экономический...
And one of the main factors for that is the big incoming labor capital. And also Poland made these quite smart steps about the labor policy. For example, Poland Business Harbor to attract highly professional specialists to Poland, and many people relocate using that. However, the main question, how will the economies of neighboring countries respond, and how will the economic situation in Baltic countries change? And how do you think, if the war in Ukraine will stay in the same status, do you think Ukraine will be able to restore its economic supplies to European countries? So, and what will happen in Eastern European countries in general? This is the question to all the speakers, whoever can answer that. Tomasz, Piotr, and both Piotrs, please, if you can reply to that.
If I understood correctly, the question was what is other European countries' approach to immigration, the first part, right? How they see it in their labor market? This is the question.
Нет, не совсем. Давайте я тогда уточню. Вопрос скорее заключался в
My question is like perspectives of development of economies of neighboring countries. I mean, neighbors of Poland. And during the last years, Poland developed faster than its neighbors, also owing to very smart policy in the labor market, attracting highly professional specialists. And my question is about the perspectives in Eastern Europe, not in Poland, but in like Belarus, Ukraine, etc. So what do you think are the perspectives?
Maybe I will start. Oh, sorry.
Go ahead.
Okay. So as regards the CE region, that is Central Eastern Europe between Germany, but not including Belarus and Ukraine, but because usually it is said that this is CE, at least in financial markets. And for this region, prospects are similar as for Poland. Maybe for Poland a bit better because Poland is the biggest, by far the biggest, 3 times bigger than the Czech Republic and Romania, the next biggest economies in the region. And you know, in reshoring, nearshoring process for global corporates, size matters. Simply an economy like Slovakia or even Czech Republic may be too small for some investors, and some other countries like Hungary or Romania, they don't have such macroeconomic stability like Poland. For instance, the balance of payments in Hungary and Romania is exploding at the moment. They have sharply deepening trade deficits. There is a risk of currency crisis there. So when you look at all the factors, size, competitiveness, stability, and so on, Poland seems to be a favorable place. And this is reflected in the in many surveys. One of them, results of one of them I have shown you. And as regards Belarus and Ukraine, here the further developments on the front, war front, are important, and sanctions, things like that. So geopolitics, I think, will be very important for the fate of Belarusian and Ukrainian economies. They have definitely very strong cost competitiveness, and if they got access to European markets, they would that would be a boost for them. They would benefit from cost competitiveness, like Poland over the last 20 years during its presence in the European Union. But first, Belarus and Ukraine have to be stable, and only then a political decision to get full access to European markets will be made. So simply the geopolitical situation has to be more stable to see stronger economic growth in Belarus and Ukraine.
Да, спасибо большое, Петр. Томаш и Петр.
Thank you very much, Tomasz. Thank you very much, Piotr, for the answer. Welcome.
The war will definitely affect economies of all the countries, including Poland. For now, the Chapter 5 of a NATO agreement, it's really convincing, and it doesn't look like the war itself affects those countries. I mean, there's a strong belief also in the business community that if anything happens, yes, those countries will be defended. So the risk of the war, that the war will spread on other countries, is not as big as sometimes is played. But definitely financial crisis, trade crisis, this all would affect our countries. So we will also have to have it in the back of our mind. And so the only thing, we didn't discuss that here yet, but there's among a lot of things that are changing in Europe, it's also in economy. it's different attitude to military buildup and militarization in general. I didn't see a good report on that yet, but I do believe that next few years, with growing investment in military in all over Europe, some countries are producing, others are buying and producing arms, and this would definitely change perspective on position of some countries. It's not only whether countries can defend themselves from Russian invasion or any turmoil that comes out of this war, but it's also a question of sustained trade. What I mean that in the future, to protect chain of deliveries, streams of resources coming to Europe, it will be more and more important to be able to defend those channels. To also in communication in remote countries, even in Africa or Middle East, to be able to discuss that we are able to protect your ships, you are able to protect your trade, and most of all, your money. So that your money won't disappear. Something after happening in sanctions, this is also would have to be discussed. So I see in European Union, there's a lot of discussion now about rebuilding relations with the so-called middle powers like India, like Pakistan, like Turkey, that we in European Union neglected. And one way of doing is strengthening relationship, military relationship between those countries. This is the same thing United States does in Asia. So I think Poland is spending much more money on arms and militarization would also build the position. And this whole concept, we for a long time discussed the 3 C's. The countries aligned with those 3 C's, which was pretty much very political to some abstract. They didn't have much economic gain. Now it's being more real. This is more about security and building of military corridor. So I think this is something also to be counted, how things will be changing with progressing militarization of our economies and political life. So this is another attribute for those countries at the time when Germany somehow unable to start up their military.
And when I can complete that part, when it comes to the labor market, this is obvious that the modern economy of Europe is competing for the people, for the labor capital. We've got a record number of employees in the history of world, in the history of Europe. So this is obvious that the countries compete for those employees, and even in our region. So the countries are trying to make a better environment for the companies and for employees, with better and worse results. We did in Warsaw Enterprise Institute a research. We did that research on 12 countries of 3 Cs. So in that perspective, from our research, we found out that the Polish labor market, I said before, that is in very good shape, in very good conditions, but comparing to to the other countries of the region, we still have a lot to do. We've got the social demographic potential of our country is moderate. We still got a lot of elderly people that are outside the market, a lot of women which are outside the labor market. So there is still a space to attract those people to that working economy. Then when it comes to competences, to the quality of the labor capital, we are pretty good. We've got a high level of good educated people. We've got the people with the high level of with a high level of people speaking foreign languages. The worst part of that research is when it comes to regulations around the market, which is the level of taxes, which is the judiciary system effectiveness. Still, there is a lot to do. There is a space to do the better regulations on that area. So taking that to sum this up, we've got a pretty good labor market. Still, there is a lot to do, especially when it comes to the easy and understandable law. So this is it when it comes to that perspective.
Да, спасибо большое всем. У нас еще есть 3 поступивших вопроса. Один о перспективах.
Thank you very much. Thanks to everyone. We still have 3 incoming questions. One of the freight and transportation market, about venture capital markets, and the IT market. But I will skip the first 2 about the IT and transportation, and then let's focus on the venture capital sector. Some of our participants are asking how the venture financing market will be developed in Poland. How important will be startups in contributing to growth? Because many startup companies have relocated to Poland from Belarus or Ukraine. However, the problems that the company might face in terms of access to venture finances is that when the economic recession is being forecasted, the investors will have to reduce the risks and will have to think about risk reduction, and they might fear to make venture investment in startups. So, dear experts, how could you comment the perspective of the venture investment capital of Poland, please?
So maybe I will start.
Which is, he's got the better knowledge of that area.
The venture capital scene is gradually developing in Poland. It's definitely not as developed as in Western Europe, simply because Poland is still less developed than Western European economies, and there is less of capital in Poland. But as the Polish economy is growing, the venture capital area is developing, and there are some government initiatives also in this area. For instance, the Polish Development Fund has a venture capital entity, and they try to pick some nice startups and fund them and develop their activities. Also, of course, there are private venture capital institutions, and they are growing in size, and they help many startups, many small companies, medium-sized companies to develop quicker. And also banks, especially us, PKO Bank Polski, we have a venture capital fund, and we cooperate with startups. We have an initiative called Let's FinTech with PKO Bank Polski. Of course, we focus on FinTech, financial startups, right? And we both cooperate with them in a sense that we do some projects together. They learn from us, we learn from them, and we also have a fund, and we buy some companies. Simply, we take stakes in them. We share capital, knowledge, and it helps them to develop. So there are many initiatives in this area, and the venture capital scene is developing in Poland. And I think that starting from such a low base and having quite strong structural trend of growing venture capital means that it will be developing regardless of cyclical developments. Maybe in Western Europe or in the US, when venture capital funds are more reliant on external capital, and now they are harmed by rate hikes, there will be some weakening of venture capital stream. But in Poland, it should keep developing. So please just Google search for some venture capital opportunities in Poland, and I'm sure you will find it.
Петр, Томаш, хотите прокомментировать также или будем завершать?
Tomasz and Piotr, would you like to comment as well, or should we continue?
Well, just a few words I could say about the startups, because there's a lot of myth surrounding it and the prospects. I think this is still something Poland has to work on when it comes to cooperation between government and startups. We have a lot of funds, we have a lot of money pouring into it, but we don't have a feeling in Warsaw Enterprise Institute that money is properly spent, that the best startups are able to develop in Poland, not migrating to the other countries. So we see that the environment for some startups and cooperation with some government agencies are working much better in some Western capital, even where you would think the opportunity is smaller. So we see a lot of talent migrating actually with the startups away from Poland, even those who are using labor force and technical staff back at home. A lot of them are migrating. So this is something I do agree that we should work on, but I don't have a feeling that even a lot of institutions, a lot of agencies are working and talking about startups, especially in higher technology. They develop well concept of how to cooperate and to lure them into Poland.
I will be a little bit more, just to add 2 more sentences, are more optimistic than Tomasz. In the Warsaw Enterprise Institute, we are a think tank which criticizes the public policies. So we are trying to find some better solutions for spending public money and to make better regulations. So our focus and our perspective is to always make it better. But when you look in general, I'm not talking about the public venture capitals funds, which still maybe there is some space to make it better, but still we see, and from my perspective, I see there is is this changing for good, for the better, not for good, but for the better. But still, in the Polish market, financial market, there is a lot of opportunities besides the public funds. Still, there are investors, there are money, so there is money. So as Piotr Bujak said, the only thing is to find the proper one and to find the proper investors, which is easy when you just Google it on, just ask a few people in the city where to find some good money for those capital.
Спасибо большое. Спасибо, Петр, Томаш и Петр. Я, наверное, буду завершать наш вебинар и хотел бы сказать пару последних слов.
Very much, Piotr. Thank you very much, dear colleagues. I'm going to finish our webinar, but I'd like to sum it up and say a couple of words. A lot of private entrepreneurs from Belarus who are relocating their businesses to Poland, they still face a lot of challenges and problems. One of them is entering new markets. It was important to hear from you that the long-term perspectives of the Polish economy are much more sustainable than in the short-term run. Despite the fact that the GDP may fall within the next couple of quarters, and despite the fact that we are most likely to face a record inflation rate over the next 3 quarters, by the end of the year, the situation will likely stabilize. And most likely the Polish economy will resist to this shock, and the industries and companies will be effectively developing in the market. I would like to express gratitude to the Polish PKO Bank for taking part in this webinar. I believe it was extremely useful to learn how to plan their economic activity over the next years. I would like all the experts. Thank you very much for participation. Please follow up the updates of the Belarusian Business Center on the social networks. Please follow up the Warsaw Enterprise Institute, because they regularly publish the analytical reports in the English language. It's available publicly at the website, and many of our entrepreneurs speak Polish. And please follow up the macroeconomic forecasts of PKO Bank Polski, which is one of the most reliable and most widely used I believe Piotr will tell us that all the information is publicly available and the forecasts are publicly available.
Yeah, and if I can
Piotr,
just
you
add
wanted
to
to
one
say
more,
something, so
yeah.
welcome.
Thank you, Dmitry. Thank you for the invitation. I would like to finish with that sentence. As I said, we are looking at the economy from very critical perspective. The point of view that you saw here was I think the critics, me and the Tomek are that part of the NGO that are trying to look and put the attention of the decision makers for all the shortages in the economy. So when you know all the difficulties and all the weakest part of the economy, I'm sure that you will be able to run your companies more successful. And that spirit of entrepreneurship is what make you successful in that difficult times. There were better times in the recent decades, but every crisis has its end, and in the upcoming five years, I'm sure we will be looking at the economy and we'll see again the good indicators, and the business that you start now will be very successful in those period of time. So good luck, and good luck with the business in Poland. Thank you.
Спасибо большое, Петр. Я думаю, это было важно услышать большому количеству наших предприятий. Спасибо
большое. Thank you very much, Piotr. I think it was important for our entrepreneurs, for our business people to hear from you. Thank you, Tomasz. Thank you, another Piotr, for taking part of this webinar. Thank you very much. Stay connected. Goodbye.